now let's go into kind of why invest in digital assets. So one thing that's really important to understand, and actually before we do this, I think there's a second poll question I'd like to bring up regarding investing in digital assets. We'd love to kind of learn more if you yourself has engaged with digital assets. So Kirby, can we get that second poll question up?
Yep,
perfect.
Should be up now.
Thank you. So do you currently invest in Bitcoin or other crypto? So there are four answers here because this is what we see most often. So there are some that don't invest and don't have any plans to, and that's fine. And then there's some that don't invest, but they do plan to. They want to start allocating, but just don't understand it yet. And then there's yes, but a friend does it for me. And if you're one of those right now where a friend got you into the space, you're not alone. A lot of people get engaged in the space that way. And then the final option is, yes, I do it on my own. So you've done your own research, you've done your own due diligence, and you've decided to invest on your own. So please give us your answer on those. We'd love to see what it is.
I'd say if you're a current Arbor client, you could probably say you do it on your own. do respond. So affirmative.
So while we're answering that question, love to kind of dive into kind of why invest in digital assets and why now. A common question we get is, why now? And that's a very important question. So what we see is that a lot of investors or advisors are looking for long-term growth and a stake in the future of what global finance can be, as well as what blockchain technology can do across all different business lines in the world, such as supply chain management, for example, is one very early use case for digital assets. So I see the poll results have come in. Well, everyone's been invested at least a little bit, or at least have plans to. So that's great to see. Interesting. So thank you all for answering that. But another reason why now is because we're seeing the growth opportunity emerge even more. A term you'll hear us talk about a lot is exponential growth. And that's through kind of what we've discovered as what we call network effects. And that's what's being built through blockchain technology, is these new networks are being built. So think of things, the reason why we say exponential is because when you build a network, you can make exponentially more connections, the more the people that use it. So diversification, it only takes a small amount of an investment portfolio to have a meaningful representation of your wealth. So you don't need to go take 50% of your assets or any type of capital you have to try to have a meaningful interaction with the space. Just a 1 to 3%, or what we suggest is 1 to 5%, can drastically improve the risk return profile of your traditional portfolio. And that's achieved because there's little correlation between digital and traditional assets. So think Bitcoin to stocks or other crypto versus stocks or bonds. And then another one of the main things, which we'll go into a little bit earlier, is the way that Bitcoin is used as a digital gold, a hard asset that can be used as a hedge. And that's more of a defensive strategy. But then we also see that the cutting edge is happening. Much more is happening beyond Bitcoin. And there are other crypto. And again, we'll dive into this a little more later on. But if you want to be at the cutting edge, this is where you want to be, as blockchain technology that's underpinning everything is going to have a drastic impact on a lot of business lines. So let's go into some of the trends that we're seeing, what's happening and most recent. So some of the trends you see here on the screen that I think may be impactful for everyone to hear about is investors want exposure to digital assets. So the first one we have here, 20 million US adults own digital assets. So that's roughly 14% in the US. And then as we just saw with some of the poll results, an additional 19 million plan on buying digital assets sometime this year. So I saw that everyone at least has a plan to buy. So you're within that. And that's only going to grow. Another fact is that Coinbase, which is an exchange where you can buy and sell digital assets like Bitcoin and others, we use Gemini. Coinbase now has over 68 million unique accounts, which is more than Schwab, TD Ameritrade, and E-Trade combined, which is huge. So It can also be reasonably predicted that there will be upwards of 3 billion crypto users by 2030. And a lot of times what happened and what people are doing right now is that this technology is analogous to the internet back in the early 90s. And so a lot of the comparisons we'll see in terms of adoption, who's using it, is compared to then. So what can we see from that? So right now, if we were to make a stance on this, we are kind of at the stages of 1997 internet adoption. So in 1997, we're at that equal amount with Bitcoin or crypto adoption. So as you can see here on this slide, we're kind of at that stage where we're still very early. So a lot of people get worried like, oh, I'm too late. I already missed the boat, or I already missed engaging and building anything here. We're going to say that that's not true and that you are still very early if you decide to engage in this asset class. And what we're seeing also with Bitcoin and crypto is that the growth rate that this is being adopted by is much faster than the internet. And so that's why you'll see a lot of excited people, not only in the investment world, but also just everyone who's outside, and they get a look at these numbers. So they call it one of the best macro investments that anybody's ever seen in their lifetime. So we want to be a part of that. So Matt, Kirby, is there anything else you would add in terms of adoption that you'd like to share?
Yeah, just add on, when we're going to talk a little bit about what blockchain is. And, when the internet was created, right, and was being built, that was kind of the first layer, right, before we had phone lines and we were, working with the current phone lines, which honestly, right, that's was the early connectivity point for the internet, right? And we had cable and all that. So but my point is, like, that's layer one. Like, that was the base layer of the internet. And now with digital assets and blockchain, it's being built on top of it. Meaning it's like there's even a compounding effect. Mark talked about exponentiality. It's like this extra layer is going to create even more connection points and even faster capabilities to grow because it's already existing on an internet. And so we have the kind of the base layer, and then we have the blockchain layer, which is layer one. And then we probably not going to talk too much about it, but then there's other layers being built on top of those already, like Ethereum, for example. So my point is, the adoption is going to just continue to accelerate and probably even be faster than what the white chart here is, and you can kind of already see that.
Great, thanks, Matt. So let's dive into. So who should be investing in digital assets? Because that's a question we get asked. Like, should I invest in digital assets? A lot of people come to us because they know we're in this space and they just don't know if they should. So hopefully now we can show you a little bit. Give you a little bit of sense of what we usually say. And one of the main things we say is not everyone who is interested in these should invest in them. However, they do have a place in most portfolios. So one thing I mentioned before is the digital gold. So Bitcoin and others like it with similar tokenomics, and tokenomics is just a fancy way of saying it's a fixed supply schedule, the money schedule that's programmed into the blockchain, into the asset of Bitcoin, can be positioned as a hedge against inflation, which makes it a part of a defensive allocation. So it's not just about speculating. With Bitcoin, you can use it as a digital gold. The other way that it can be in a portfolio is as a speculative asset. So if you have an investment portfolio, you may have stocks. Stocks are a risky asset, but you may have small cap stocks or private placements, or you may have other pieces to your portfolio that are much more further down the risk curve, those speculative assets. We see that these assets can be put into a speculative position that just like any other speculative position. We house them within an alternative section in our portfolios, as well as a defensive mechanism. So we've used both. But what we recommend too is that you only allocate capital that has the ability to stay in its place for at least 5 to 7 years, those longer time horizons, because it is still very early. You definitely don't want to allocate any capital that you will need to use that capital for in a short-term time frame. So anytime between that 1 to 2 or 1 to 3, or even up to 5 years, just because it is a very risky and volatile asset class. So with that, let's go into a couple of our portfolios. And again, we're not going to spend a lot of time here. If you guys have more questions about these, we're happy to answer them, but we will be hosting a different webinar where we review the investment thesis and the portfolios more in depth. But really, we have two portfolios. And the first one we call our flagship portfolio. And this is our one just completely exposed to Bitcoin or Ethereum. And these are the dominant forces right now within crypto. These are the two largest by market cap that have been created. Two very different use cases, but they are both going to similar tokenomics, i.e., they're both looking to go towards a fixed supply. Bitcoin is already there, but Ethereum is starting to move towards having more of a deflationary money supply. So we see that as a good fit. So for anyone who wants to get in and they just want allocation to Bitcoin or Ethereum, we can absolutely give that to them. The second portfolio we call is our Compass portfolio. And this is where we go further out into the asset spectrum, and we go into four main categories. So the first category is as a store of value, kind of that hard money asset. So anything like Bitcoin, we will put into that section. The second is platforms and scaling solutions. And again, I apologize if I'm using terminology that you aren't familiar with, but please engage us through those questions. Platforms and scaling solutions. So those are things like Ethereum, Solana, Polkadot, or Cardano, those base layer platforms that are utilizing smart contracts to build the next generation of networks and companies. The third section we have within that portfolio is decentralized finance. So if you're in the space or if you've heard anything, DeFi is also what it's called. We have a section of our portfolio dedicated to decentralized finance. And what is decentralized finance? Simply put, it's taking all of the traditional financial services that we all know and love, like banking, savings, borrowing, lending, or trading, and putting it on a decentralized base layer. That means peer-to-peer. There's no central party taking control of the platforms themselves, unlike traditionals, which are all centralized. And the fourth section is called applications and utility. And this is more like a catch-all for everything else that we have access to. And so those are going to include things like Web 3.0 or digital assets that have a specific service or product attached to them. And by owning the asset, you gain the ability to use that service or product. So an example would be something called like BAT or BAT, which is associated with what's called the Brave Internet Browser, which means you can actually earn the token by utilizing their internet browser. And actually you get to control your identification and your information, the data that you use on the internet, and you can actually earn by giving out your data. So you take more control over that experience as opposed to utilizing, any type of normal browser where it's concentratedly controlled by either Amazon Web Services or Google. So we have those are the four sections there. So those are the two different portfolios. And again, we can spend more time in those if people have more questions. So the benefits of partnering with us. So why even partner with anybody when you can do this yourself, or if you have been doing this yourself? So one of the things, this list here will kind of represent that. So safety and security. So that's what we have first in mind. So we're going to help you establish, or we can help you establish the proper network and computer security needed to help protect yourself against those scams or phish attacks or ransomware or things of that nature, because that does happen. And especially in a space like this where it's so young, that's where hackers will usually target those. Time and trust. So these markets are open 24/7, 365 days a year. Our commitment to you, and which is why we have a team and we hope to expand that team very soon, is that we are dedicated to those. We don't hold the traditional working hours through that. So we have to be in tune all the time. So again, I don't stay in it all the time, but that's why we have a team and we take that team-based approach. Peace of mind, just knowing you have a team looking at this for you. It's a full-time job to understand what's going on in this space. And we know that. As through our journey, I hope you guys got that sense. And if you've already engaged yourselves, you probably already know that as well. We've tried to simplify everything and make it easy. So that way, all it takes is just some signatures and as well as some education and the same type of process you would go through on a traditional wealth management track is the same process we take here. We make sure we go through a planning phase and we make sure we create a disciplined process for you, and then we help you execute it. So that's how we can help you create that ease of use. And then the last piece is education. So we just recently re-released our website. So you can consider us and our website the hub for all things digital assets. So we're going to have podcasts there, articles, links to other third-party articles, education opportunities that aren't with us. There's a lot happening in this space, and we wanted to be that centralized place. And we've made some partnerships specifically geared towards the education to help provide that for anyone who wants to engage, whether or not you become a client. Matt, Kirby, anything else you guys want to add in terms of the benefits of partnering with us?
I'm good.
All right.
Yeah.
What sets us apart? I think we just went through that. So it's pretty much the same thing here. So we're going to go on and we're going to get to the questions portion. So right now we're going to go through the 5 most commonly asked questions about crypto. And actually, I see Paul came in with a question wanting to understand the relationship between cryptocurrency and the blockchains themselves. So I think this is going to be a great starting place. So Matt, I'd love for you to kind of answer this first question. Is Bitcoin different than the Bitcoin blockchain?
Yeah, good question, Paul. You clearly knew what questions we were going to ask, or what questions people are asking. And so this is an interesting concept, because you hear and read, in the news about Bitcoin or the blockchain, and it can get jumbled together. But these are very different things. So there's this question: are they different? Yes. And so I'll attempt to explain how they're different. At its fundamental layer, right, the blockchain, and this isn't exclusive to just Bitcoin, but pretty much every single blockchain, is the fundamental layer that contains all of the data and transactions. It's like a ledger, okay? And what's unique about blockchains is that they're immutable, right? Once everything's been stored, all the transactions have been accounted for, and they get put up into this nice little box or block, and then it gets memorialized, and it can never be changed. So that's what the blockchain is. So then what's Bitcoin? Well, Bitcoin is the token or coin that's associated with the blockchain. So the people and the computers that are validating these transactions and making sure that the network is safe and secure, they get rewarded with Bitcoin. And so right now, what is it? Is it 6 and 6.25? Or are we already down to 3? I think we're at 6.25 every 10 minutes, right? Mm-hmm. So every 10 minutes, every block of Bitcoin gets memorialized on the blockchain, and the winning miner gets rewarded with 6.25 Bitcoins. That's how they come into existence. And then the asset itself, the coin, can be traded, sold by these miners. So it is fundamentally different what Bitcoin is and what the blockchain is. And so I hope that answers the question. But so when you read articles, because I've read a lot of articles too, that even the articles and the authors can be confusing about what they are, but they are very different. And it's important to understand the difference between the token or the coin and the underlying asset. And we're not going to get deep into the different types of governance structures on this call, but there's even different type of coins and tokens.
Yeah. Thanks, Matt. Appreciate you diving into that. And I think maybe one thing we can do is we have another poll question, actually, I'd love to get with everyone. Let's maybe make this real for everyone to maybe help differentiate too. So let's get that third polling question up. So if everyone could put their eyes up one more time, we're going to go with our last question, which is, have you ever used a service like PayPal, Venmo, or something similar as a payment service? Simple yes or no. And then once we get that back, we can hopefully make this a little real. And I see there's been a couple questions put into the chat. Well, we're going to get to those, I promise. So as we're finishing out the answers, it looks like 100% yes, everyone is engaged with PayPal. Perfect. So this is going to be actually a good way to go about it. So a way you can think about blockchain as opposed to Bitcoin, the asset too, because that is something we do, because there is the blockchain, there's the blockchain, which is the distributed ledger, and then there's the asset, which is the coin or the token. So if you've used PayPal, sounds like everyone has. So PayPal, how can you send money in PayPal and Venmo instantaneously? That's already exists. Now, the difference, so the way you can think about PayPal or Venmo is that they have their own distributed ledger, right? That's internal to them. That is their base layer. And that's how they are able to send and receive, get people to send and receive money instantaneously through their accounts, is because they work off their own ledger. So that's like how the Bitcoin blockchain and Bitcoin work. And now on PayPal, you use dollars or whatever it is, the currency it is that you have denominated in your PayPal account. But those dollars are kept on that internal ledger. And that's why it can go send and receive instantaneously. And then every other company like PayPal, like a bank or anything, has their own distributed ledgers. They aren't blockchains, but they're usually held on Excel files or some other form of a database. And they all have the same thing. Internally, they can go between each other. But then when they try to go across, that's where then you have your 2 to 3 day wait time. It costs money to go between, things like that. Where Bitcoin blockchain, it's globally open. There's no central service to manage that blockchain. And the Bitcoin asset is that asset that you send and receive on that blockchain. So yes, the blockchain allows for that asset, and that allows for the creation of that asset to be used. So let's say if PayPal had its own blockchain that was open, you would get like a PayPal coin as opposed to having a fiat or a dollar amount. So I hope that maybe helps people make some connections. PayPal is like a closed version, and then Bitcoin, and that's why it's so revolutionary, is because this has never been done before, and blockchain technology enables that. And then the currencies within them will allow the interchangeable or interoperability as well. So Matt, thanks for jumping into that. And let's get to some of these questions right here. So Surya Ramesh comes in with, is there a cap to how many crypto coins are out there? So short answer, no. Anybody can come in and create a coin, create a project. There just has to be what's called a liquidity pool in order for it to be traded or mined or whatever the case is. So if you have enough assets that you want to go into any one of the exchanges, you can create a coin. But that makes it to where there are a lot of scams out there. There are a lot of coins that aren't doing actually anything. And that's where when you have 7,000, you want to make sure that you're doing your due diligence to know which ones are real and which ones aren't. So no, there is no cap, but that's where it's really important. Why we feel that we can be a trusted resource for people is that when we invest, we've done the due diligence. We know that these are good faith projects and trying to create value for the world.
I'll jump in real quick, Mark, and add to that, right? With how many, right? There's no limit to this. Well, there's no limit to how many stocks can get listed either. But what's different here is, I think if you go to Coin Market Cap right now, that says like there's 12,000. I mean, but I'm sure most of those at this point are zombie projects. Nobody's doing any active development on them. And so what Mark is saying, this is where you need to be paying attention and understand what is real, where is their real value being accruing, versus even some of the social tokens, right? Well, I'll mention Dogecoin, right? Shiba Inu, which was just forked, and all these other things that have been put out there. That do they have value? Well, maybe they have some social value, but with specific to DeFi and some of these other things where there's a project and a blockchain that are trying to replicate traditional financial infrastructure, that's very different than a meme coin or something like that. And so it is fun as it is to see the prices of those things go up and down, which they may have some social value. That's a whole other topic for another discussion. But I just wanted to put that out there that, there's no cap on these things. And you have to really understand what these are at a fundamental level.
Yeah, which I think is a great way to go into the second most asked question, which is, do Bitcoin and other crypto have any real value? So Kirby, I'd love for you to jump in on this one.
Yeah, in short, they don't. It's all just magic internet unicorn money. Just kidding. No, there's just give you some examples of some, real life use cases. Let's say you do consulting work for somebody over in Europe, and then they're trying to get money back to you to pay you for your services. They'd go to their bank over there, and they might wire funds to you here in the US. So there's intermediaries in the way. And the process is usually slow. Sometimes an extra day with international wires. And then also too, if you have a weekend or like today, which is a banking holiday, it might take 4 or 5 days for you to get paid in that instance. Whereas, if you're using one of these other, peer-to-peer payment systems on a blockchain, you can get paid in minutes, if not even seconds sometimes. Or some other kind of things that we've already hinted at, like in the decentralized finance place, you have maybe somebody doesn't have access to like one of these traditional brokers like a Schwab or an E-Trade, and they can, as long as they have an internet connection or a smartphone, they can get on one of these decentralized exchanges, and let's say they want exposure to Apple or Amazon, they can go kind of buy one of these synthetic assets that tracks the price action of one of those more popular equities that are out there. Those are, and then there's borrowing and lending options. There's a couple examples.
Yeah, I like that you mentioned too, because I think that hits on the global aspect to these assets, right? Like in our purview, based in the US, we may not see the need for traditional banking services, but there are a lot of the world doesn't have access to bank accounts or high savings or the ability to build companies like we do here, to be able to get funding. So a lot of what Bitcoin and these other digital asset networks that are being created are trying to bring those things to the world through blockchain technology. One of the big areas is real estate. You can put a real estate transaction on the blockchain and then get rid of all the intermediaries that take all their cuts based on an old legacy system that isn't digitized yet. You can start doing that now. And then from the borrowing and lending space, some people don't have access to be able to borrow to buy land in some of these countries. And so that's where a lot of these protocols are trying to bring a lot of that to underserved areas in the world. So thanks, Kirby. Appreciate you jumping into that. And I think that goes into kind of that global thing too. Cassandra comes in with the question, will the Pandora Papers have an effect on crypto? So I'd love to, I'll take a stab at it, and Matt and Kirby, I'll have you guys join in. But an effect on crypto, what I would say is the initial effect that it may have is it's going to tie back into this idea of trust, right? I think what's happening, especially with other generations, is that centralized entities have lost a lot of trust in governing how our economies work, right? So the Pandora Papers are just another example, an affirmation of what people maybe expected before, and kind of what's happened now. So that may bring in more. Will it have a significant impact? Probably not, because it's more affirmation of what people have already kind of felt. But yeah, we don't see any huge shifts happening because of the Pandora Papers, but it definitely is a good thing. It shows that there is a place for decentralization in the future, which I think is the big thing, because that's kind of one of the ethos that we're excited about too, is that type of governance. But Matt, Kirby, do you have anything to add on the Pandora Papers?
No, I just said that you mentioned trust, right? It's about trusting the current financial system and the financial framework, and are people being open and honest with their assets and taxes and all of that good stuff. And like Mark talked about it, right? There's this entire trust economy too, that moving a little bit beyond the Pandora Papers here. It's like the trust economy, attorneys and contracts and spreadsheets and all this stuff, all this infrastructure that we have in place. A lot of it can get done now with smart contracts, right? And so that's where we talk about trust. Like this trust economy is going to be moving, and Pandora Papers is kind of another thing that could push in that direction.
Absolutely. Great question, Cassandra. Thanks for putting it in. So that, again, another good segue into one of the next common questions we get is it safe? And that I heard it's mostly used for illicit activity. So Matt, do you want to dive in here on this one? Because I know I have plenty to say on this.
I'll start by saying what is true, and what a lot of people have probably read, is in its early days, right? We're talking 2012, 2013, right? Bitcoin was used for some illicit activity. Even today, and Mark, I'll let you jump in here a second, even like most recently, some of these, ransomware attacks and things like that, it does get used. But similar to Pandora, is it the only asset that gets used to settle things? No, not at all. So, are there scams out there? I think we talked a little bit about some of these more Ponzi or socials types coins. They're not Ponzi's, but they're like these social coins. You just have to be careful. It's not necessarily illicit activity, but they're literally looking for a bag holder. They're literally want to leave somebody holding the bag, and then they're all going to cash out. So you have to be aware of that. Is that illicit activity? Maybe, maybe not. Is it safe? That's one of the things that we've talked about here is knowing which protocols have good faith projects, right? They're actually accruing real value. Mark,
Yeah.
I'll let you jump in there.
No, thanks, Matt. I appreciate it. Let's just put the numbers out there, right? So I think the point is that I think the last thing that came out from the UN was 2 to 4% of gross GDP, which equated to like 1.1 or 1.4 trillion dollars in the traditional financial markets, was used for illicit activity. So let's put that in context. That's 1 to 1.4 trillion dollars. So where in crypto, in 2020, the last data that came out from Chainalysis, which is a data company in crypto, said that 0.54% of crypto was used for illicit activity, and that equated to about 10 billion. So not only is it lower relative to what the space is, but it's also lower in real nominal dollars as well. So there's always going to be bad actors in anything. I think I heard someone else talk about how when cars were first created, there wasn't roads or traffic lights or traffic laws when cars were first created. That didn't come until after people got hurt and people were using cars to go to bank robberies and things of that nature. Like the regulation follows after the technology is created. So it's almost, and again, this may be, and the thing we have to be mindful of is to make sure that we are doing the due diligence on every protocol, because yes, there could be a bad actor. But then that also speaks to the security aspect as well, is there's always phishers, there's always scammers, right? I think a lot of the popular, as a financial advisor, when I was sitting in the seat for the last 5 or 6 years, it was very common that clients would get called from these phishing or ransomware attacks, pretending to be the IRS, right? And they didn't know what to do. And sometimes they fell for it. I mean, that all happens. But that's where we can be here. And we have layers of security built in through our partnerships with our exchange that we use. And then obviously by working with us, you have someone you can trust there. But I think we actually, we had a question come in, I think goes along with this last question as well. If Bitcoin is, as you stated, digital gold, how much of a threat to government issued inflationary fiat currencies is it, and how likely are governments to try to regulate it out of existence? So I'm really happy actually, because 2 things just happened. So both Jerome Powell, as well as who else said it, Matt? Both Jerome Powell,
Gary Gensler, the SEC chair.
Yeah, the SEC. Yeah, Gary Gensler at the SEC recently, within the last few days, said that they are not, explicitly said that they are not going to ban crypto. Is regulation coming? Yes, absolutely. And we are here for it. The way we approach it is we actually manage our portfolios as if these were assets. So for us, there wouldn't be really any big effect unless the regulation came for some of those centralized onboarding platforms like our exchanges. But again, being that our exchanges have gone through their own due diligence process and actually have some regulatory backing already, which again, if you have any questions, we'd be happy to hop on a call and talk more about that, where we feel comfortable that that isn't going to happen. But in terms of Bitcoin itself being regulated out of existence, definitely don't think that's happening. One thing that's central to our investment thesis is something called the Lindy effect. So if you've never heard of the Lindy effect, I highly suggest you look it up, but it's on our website too. We're going to put some information out there just specifically on that. But essentially what it is the longer something is in existence, the more defensible it becomes, the more likely it is to survive and thrive. So we're seeing Bitcoin achieve significant Lindy effects by its user base, by its network effects. When you have the institutional adoption, like all the biggest banks in the world. So we got the US bank actually getting in. It's the 5th largest, I think, in the US, right? and then other banks like Bank of America, JP Morgan, Goldman Sachs, everyone's building infrastructure now to enable the storage and trading of Bitcoin specifically, and with the other digital assets hopefully to come, like Ethereum and the others. So could they? Sure. I mean, that's always going to be a risk and something that we have within our risk disclosures. But what we're seeing is that the probability of it is getting lower and lower, and that speaks to what I mentioned before in the Lindy effect. But Kirby, Matt, anything else you'd like to add there?
Yeah, on the technology side, right? When we talk about how governments respond to technology, and this, when China was banning, they've been, people are saying they've been banning, Bitcoin and mining for years now, and they finally seem to have finally followed through on it. It's not any different than the way they treat the technology sector, right? They didn't allow Google, they didn't allow Amazon to operate for a long, long time, and it's just the way that they've responded to freedom of information and really empowering individuals. So let's look at the U.S. for a second. The U.S. actually has done a pretty good job of allowing technology and innovation to flourish. If you look at the equity markets and who are the largest, literally globally, the largest and dominant tech firms, they're all based in the U.S. because we have taken a stance of innovation. Now we're at a pretty critical moment here, and there was some concern that the U.S. is going to be a little bit too harsh on crypto, and there's actually some bills pending in Congress now to allow this kind of safe harbor, not in the ERISA sense, but in the sense of allowing innovation, specifically in crypto, to flourish. And so it's really important. But I think that's just a continuation of how the U.S. has generally approached technology. And Mark hit it on the head earlier, right? Regulation doesn't lead innovation. Regulation's job is to kind of catch up and to create safe spaces for innovation to flourish. And that's kind of where we are. But I'll be honest, it was a little, touch and go here in 2020 and 2021 with, we don't know how this is going to go from the US, but and Mark mentioned, we are finally starting to see some real definitive answers from people in DC and other institutions in the US saying, yeah, we are here and we are going to promote this. We're not going to ban it. And they're working on things to actually encourage innovation in a safe way.
Thanks, Matt. Really appreciate you jumping on that. We spend I would say a lot of our time is spent more on the regulatory side and understanding the effects that any type of regulation could come. And what we continue to see is we like things like China banning crypto, because then it gets diversified across the world more. And so in China, when you had coal mined mining of Bitcoin, we're seeing that diversify now, even here to the US and across the world, to using more renewable energies, right? It's becoming a more efficient way. So we're likely to continue to see things like that happen. So the more that crypto or digital assets can move to areas where innovation can breathe and thrive, where that from a macro perspective, that's a good sign for us. But obviously we're paying attention. Things move very fast. I think that's the thing with, especially from a regulatory standpoint, they're already behind usually with innovation or technology. Now, this technology moves faster than anything we've ever seen. As we mentioned before, an important note is that this is being adopted 33% faster than the internet was. And that was a pretty fast adoption. That was the fastest adoption. This is being adopted, and not just being adopted, developers. So one of the things we do at Arbor Digital too is pay close attention to the developer community, the technologists, the people actually building the blockchains. Where are they going? What are they doing? What's happening in their world? Because we're not technologists, right? We're all boring financial people. So it's been really cool actually to kind of dive into that world and actually combine them to build out truly an elevated investment thesis around these networks. So that's kind of our stance on regulation. And I mean, from a regulatory standpoint, if we get any positive clarity, we see that as that being one of the catalysts for this bull run or the assets to continue to grow over the short term. So very exciting there. So those are the 5 most. And then this is the last one. So is Bitcoin the only crypto worth investing in? And actually before that, let's go. I got a few questions in here I'd like to get into. Paul Harley asked, when will you post the video last week about? Sorry, I was not able to get to it. I had a little bit of emergencies this morning, Paul. So I'm going to get that out first thing tomorrow morning. I promise. So for those of you who are wondering what the weekend roundup is, I write a weekly article. Most of the time, I would say 90% of the time, it's on Monday that it gets released, just highlighting what happened over the weekend. Because especially if you're an advisor or an individual investor, the weekends are time to spend with family, friends, and going to events and everything like that. Not everyone has the flexibility to not work the 9 to 5 job or work most of the week. So I make it a point to make sure I keep track of everything that happens, both from a price move and from a news standpoint, just to make sure everyone's caught up. So that way, when you come in on Monday, you can get a sense. So you can get to us on our website, or it gets posted to LinkedIn as well. But Paul, you also asked the question, is DeFi going to become Refi? Is there a risk that the DeFi space will be overhauled by regulators? Is it something people are discussing? So Refi, regulated finance, is that what Refi is?
That's what we currently have.
What's that?
So that's what we currently have.
I was going to say, yeah. So it's going to turn into traditional finance.
TradFi is Refi.
Yeah.
Paul, I'll take a quick stab. I'll be super quick because I know we're running out of time here. But you may be thinking there's actually a couple of DeFi protocols, specifically Aave and Compound, that are working with an institutional grade fork, essentially, of their blockchain that might be subject to AML, KYC, BSA stuff. I know I just threw a lot of stuff out there, but it'd be a regulated access for some of these institutions to actually interact with the blockchains. I hope that answers the question, but that's a whole nother topic, to be honest, but it's a great question. And yeah, people are discussing it.
Yes, I would say that even more so from a regulatory standpoint, especially stable coins, CBDCs, those are top on regulators list right now. I would say those are going to be the first things that get regulated before anything else. And let's go down for some questions. Let's see here. Yes, so let's do this. So primary difference between Ethereum and Bitcoin. Short and simple, Bitcoin is a payment network. It's designed, decentralized, and secured to be payment rails. Very simple. That's what it is, and that's what it's going to be for its existence. Anybody developing in the Bitcoin community is you won't hear them talking about DeFi, smart contracts, all that stuff. There are separate communities that love Bitcoin that may build on top and go to separate chains that utilize, but that's a whole different discussion. But Bitcoin specifically, that's what Bitcoin is. Ethereum is really just meant to be an open global world to where you can come create decentralized applications to execute smart contracts. That's what they want to be. So much more than just a payment system or monetary system. They want to be open global finance and anything using smart contracts. And that's also like Solana and Cardano, all those want to do that. So identity, privacy, yield generation, all that stuff. So that's what they do. But we're coming up on time and I want to be respectful of everyone. So let's go. We had a couple of slides we would dive into, but I think we got enough covered. So to get in touch with us, just go to our website. Again, we want that to be the hub for everybody. So arbordigital.io. And if you are not a client of Arbor Capital Management, but would be interested also to talk about traditional wealth management and financial planning, as you saw, as Kirby mentioned, he's a certified financial planner. I am also a accredited wealth manager, and we have Arbor Capital. So if you want to engage us in that way, please feel free to visit us at acminc.com. And either way, whether you wanted to be crypto investing or traditional investing, we can help you do it safely and securely and in a disciplined way. Matt, Kirby, anything else you'd like to add before we adjourn here?
Well, I wanted to say thank you for everybody for joining our inaugural call. Clearly, this is our first one. We didn't get the recording started on time, but we appreciate you all being here. I'll take a quick 5-second stab at this last question. How will China's digital yuan affect Bitcoin? I don't think China's digital yuan is going to affect crypto or digital assets that much. I don't think what my line to this is, I don't think people are going to choose to settle in the Chinese digital yuan or traditional yuan unless they don't have any other choice. And so that's kind of been my take on that. I think it's going to be not an open, it's just another tool to surveil their citizens. So I don't think people in the West are going to be super excited, or even other parts of the world super excited about that.
Yeah. And if we didn't get any questions answered that you had, please, again, our website, engage with us, talk with us. We're here to help in any way, even if you decide not to invest, even if you don't want to do anything like that, we're always open to a conversation. So I will echo Matt. Everyone, thank you so much for sticking with us for the entire hour. We hope this was beneficial. You got some education out of it, and we hope to see you again very, very soon. Thank you all. Have a great day.